All right, everyone. Thank you so much for joining us here for another edition of our Franchise Your Business webinar series. I know we have several folks loading into the live event as we're getting this going, but this is our monthly franchise sales and marketing trend session where we like to talk about what's new and what's happening in the world of franchising and franchise trends. So if you're new here for the first time or haven't been with us in a little while, just a quick reminder, we go through a whole bunch of data in quick spurts. So I try to address the overarching idea or concept that the data is producing and talk through that just number one, so you know about this data and information that it exists and what's happening from macro and microeconomic data points. And then number two, in some instances, we'll make sure to try to talk about how you can use this in either tweaking your marketing message or in tweaking some of your marketing content or sales presentations with prospective franchise buyers. So again, my name's Tom DuFore. I'm the founder of Big Sky Franchise Team, and I'm thrilled to have you on the line. And so I'm going to share my screen and we will get this show on the road here. So we'll get this shared. There we go. Now we've got that share button. Okay. So the first report I always like to share is the Institute for Supply Management. They have three reports here. We're going to go through each of these: the manufacturing PMI, the services PMI, and the hospital PMI. So first up is the manufacturing PMI. I really like manufacturing PMI because it tends to be a leading indicator for where things are going at large for the broad economy. So we tend to see that this is a leading indicator, maybe 6 to 18 months, maybe 24 months ahead. So we can see that the PMI, which stands for Purchasing Managers Index, is at 47.8%. And what the report initial paragraph says, it says the U.S. manufacturing sector contracted in February as the manufacturing PMI registered 47.8%, down 1.3 percentage points compared to January's reading of 49.1%. This is the 16th consecutive month of contraction. 4 out of 5 sub-indexes that directly factor into the manufacturing PMI are in contraction territory, up from 3 in January. The new orders index dropped back into contraction territory after 1 month in expansion. So you can see 50% here, just as a reminder, is the manufacturing economy break-even line. And then it shows 42.5% is the overall economy break-even line. Excuse me. Looks like they changed that break-even line for the overall economy. That's been lowered a little bit. It was closer to about 48% previously. But at 47.8%, you can see we're underwater a little bit here for this manufacturing PMI. And to me, it kind of sings a song that we've seen for the last couple of years, I think, in the economy, that, it's just kind of hovering around an even number just in general. So I think that's pretty interesting to note. So let's go ahead and jump into the next report here, which is the services PMI. And you can see that this is just above break even. So it says in February, the services PMI registered 52.6%. And 0.8 percentage point increase compared to the January reading of 53.4%. A reading above 50% indicates services sector economy is generally expanding, and below 50% indicates it is generally contracting. So that you can see here that generally speaking, with it above 52 or above 50%, and then the overall services economy break-even line at 49%. You could see that it's above that. So you could see it's just floating just above that number. We had the manufacturing just below its break-even line. Again, they're right on that threshold, which I think is what you've probably experienced as a leader of your company. You've probably experienced something similar in your own business over the course of the last 24 months or so. Next up is the hospital PMI. So this had big surge here. If you see the chart, there was a big surge at the end of 2023 going into 2024, and now it's kind of fallen down just a little bit, but it's still up as compared to most of 2023. So we take a look at this. It says the economic activity in the hospital subsector grew in February for the 6th consecutive month after contracting twice in the previous 4-month period, with 35 consecutive months of growth prior to that. The hospital PMI registered 56.6% in February, a 4.9 percentage point decrease from the January reading of 61.5%, indicating a sixth straight month of growth. So again, this is good, I think, positive indication with you have manufacturing, services, and hospital being large contributors to the broad economy and economic contributors. So to me, again, these are mixed messages. So for your business, for your franchise company, and when you're thinking about your franchise company, think about how manufacturing orders, the services economy, or the hospital industry, if any one of these industries or segments might impact your particular business, or think about how it might impact it, so that you can be communicating this message to your franchisees. For example, if you know manufacturing is going to impact it pretty heavily, well, you could take a look and note that right around August or September of 2022, it's coming up on 18 months now that it's kind of been on this lower end here of numbers. It's been underneath that manufacturing break-even line, and talk about how that has or hasn't impacted your business. Your business has been doing fine regardless of that, or in the services economy, or hospital and healthcare side of things. Okay, so let's move on over to the unemployment rate. So this is from tradingeconomics.com, and tradingeconomics.com for the U.S. unemployment rate, and it reads, the unemployment rate in the United States rose by 0.2 percentage point to 3.9% in February of 2024, touching the highest level since January of 2020 and surpassing market expectations of 3.7%. Number of unemployed people increased to 334,000 to 6.5 million. The labor force participation rate was 62.5% for the third consecutive month, and the employment population ratio was little changed at 60.1%. So what does this mean? Well, it looks like we've got an increase of total unemployed, and the labor participation rate is unchanged. So maybe this is an indication of some seasonal workers that are out of work. Not sure what to make of that specifically there, but it is worth noting that there's been a slight uptick in unemployment. I don't think it's anything necessarily. If we scroll down and look at the trend here, we can see 3.8. If we go back to a year ago, in March it was 3.5, then 3.4, 3.7, 3.6, 3.5, 3.8, 3.8. 3.7, 3.7, and now up to 3.9%. So it's kind of been hovering in this zone somewhere between 3.5% and 4% for the last year. So just worth noting that there are people looking for jobs. It's still relatively low speaking, but just something for your franchisees or new franchisees to know that despite a slight uptick in unemployment, labor market is a tight market. That's the one feedback from a qualitative aspect that I get from our clients every day and every week is it's finding folks is a challenge. So having that conversation or being prepared with a solution to that challenge as a franchisor, I think is going to add a lot of value to you in your franchise recruitment efforts. Okay, now the inflation rate. So this is from tradingeconomics.com as well. It's the U.S. inflation and CPI, Consumer Price Index. And it says the annual inflation rate in the U.S. unexpectedly edged up to 3.2% in February 2024, compared to 3.1% in January, and above forecasts of 3.1%. Energy costs much less than expected, with a drop there, and gasoline declining 3.9%. Utility service falling 8.8%, and fuel going down 5.4%. Meanwhile, prices increased at a softer pace for food, shelter, new vehicles, and medical care. Also, the cost was steady for apparel. and continued to decline for used cars and trucks. In contrast, prices continued to rise sharply for transportation. Meanwhile, the monthly inflation rate rose to 0.4% from 0.3% for prices for shelter and gasoline, contributing over 60% of the increase. So we can see here, so the cost of shelter and gasoline was 60% of that price increase. On the other hand, core inflation eased to 3.8% from 3.9%. Okay, so what's that mean? Well, inflation's relatively stable outside of housing going up a little bit more than others, and gasoline increasing more than others. So still something we need to keep a close eye on. But certainly better to see the number being lower. But as I've mentioned every time for the last several years for your franchise prospects, remember every month that ticks by, the value of their dollar is less, and the cost to borrow money is more because of this inflationary process. So if you have candidates that are in your pipeline or in your system that have made it clear they want to purchase and buy a franchise, or maybe some franchisees that want to upgrade equipment or upgrade facilities or something in that regard, it's highly unlikely that these costs are going to come down. We're seeing a little track, like it said, for maybe some new vehicles. Used vehicles are coming down, so now might not be a bad time for those franchisees and service businesses or vehicle-related businesses to consider making those purchases. Anyway, just some food for thought there on that. Next up on our list is the surveys of consumers by the University of Michigan, and they have done an annual they've done monthly consumer sentiment for, well, over 50 years now. But you can take a look. I'll look at, if we pull this up for the last 50 years, you can kind of see these peaks and valleys here. This is the last 50 years. The gray bar, these gray vertical bars are recessions. And the blue line is the index of consumer sentiment. And I'm just going to zoom in a little bit, and you can see on the far right, the lowest point here was right around, I think that was 2022. And we've had a nice rise the last 18 months or so, where we're coming back up to numbers that we saw in 2021 and into 2020. And so it's nice to see these numbers coming back up, and it's been a steady increase. So hopefully, if you're tuning in, you're seeing this in your current business, and hopefully your franchisees can share that they're seeing a general better overall consumer sentiment, meaning it might be just what this means right now, and something to share with prospective customers or prospective franchisees. It's probably a little bit easier to get a yes from a customer, a little bit easier to get a yes for an upsell, a little bit easier for that first sale, a little bit easier for a higher ticket purchase, a little bit easier for some of these for new lead gen, people to come in as a new lead. So if you haven't thought of that, consider it. Think about that as it applies to your own business and what you're seeing, and talk to your franchisees to see if they're noticing that. And ask them about it, because I'm certain they told you when it was harder. Your franchisees in the systems, I'm certain that they communicated that to you. And they may not be communicating that as much because they might see the top line going up a little bit easier. So just get an idea, ask them. And it might be something worth noting if you get that feedback. It might be something worth asking, having prospective franchisees ask current franchisees. Have you noticed that it's been a little bit easier? If it has been, certainly that would be helpful to communicate that message. Okay. Next is from census.gov. They provide an aggregated list of total new business applications that have been filed across the country. So they aggregate every state, all states' new business applications or new business formations that come through. And you can see in February, we're still over 400,000 new business applications for startups, 436,000. So we've seen this trend of over 400,000 now for coming up on 3 years. Actually, coming up on almost 4 years, which is just incredible. And I just like to point out, look at here, pre-pandemic number, it was just starting to clip at 300,000 new business startups. And boom, here we come. Now, COVID hits, it drops, it surges, and it's kind of leveled off here somewhere between about 425,000 and 475,000 month to month of new business applications, which means we're talking about if we look at that, that's somewhere between that's what is that, about a 33% to 50% increase over the data here leading into the beginning of 2020. And what does that mean? Well, to me, this is very important. It's a point to make that whether the candidate expresses a certain level of seriousness or not to you, the reality is that this person, this candidate, has new business startup on their mind. That's the reality. They're thinking about starting a business. There's something in the air. People are starting businesses, means other people are thinking about that as well. So keep that in mind for your own business and reiterate back to that candidate. Try to find out what drove them, right? What's driving you to start your own business? Everyone's going to have their own reason, and talk about that. Remember when you told me when we first started speaking, you said that you were interested in getting into this business or buying this business because you wanted an investment opportunity, or because you wanted to take control of your own destiny, or because you wanted to build a business that you could run with your kids. Whatever that might be, talk about that. And remind them how your franchise opportunity allows them to fulfill that dream. So I think that's an important marker there. Okay. Next up is the franchise, the International Franchise Association's annual franchise economic outlook. We spoke briefly about this last month, but I just thought it's worth noting the highlights from this again. It says the overall franchise establishments will increase 15,000 units in 2024, or grow by about 1.9%. Franchising will add approximately 221,000 jobs in 2024. Total franchise businesses output will increase 4.1% to $893.9 billion in annualized GDP output, or franchise, in annualized revenue. Franchises GDP will continue to grow to 4.3% at a pace of 4.3% of $545.8 billion. And it says personal service and quick service restaurants will experience the strongest growth of any industry. So if you're in personal service or quick service restaurants, this might be an important statistic to point out if your franchise is in this offering, that the International Franchise Association is projecting that this is going to have the strongest growth of any industry. By the way, it might be something you want to share with your franchisees too, just to share that. So just some points for you to review and discuss. The Small Business Index Q4 of 2023, I'm just going to touch on this quickly because we have spoken about this a couple times. Next session, we'll get the updated quarterly numbers, but it shows that the Q4 2023 Small Business Index by the U.S. Chamber of Commerce and MetLife is showing that it was at 61.3. So you can see this back from Q1 of 2020, pre-COVID and then post-COVID. And you see these numbers steadily climbing and bouncing just a little bit in 2023. So we'll see what Q1 has to say. Same thing for the Vistage CEO Confidence Index that they produce. One thing I do like to highlight here is just Boxwood Partners. They do a lot of mergers and acquisitions, specifically in franchising, and just to show in the last 4 weeks, they've had 3 deals go through. The Lash Lounge. So they advised the Lash Lounge on its sale to Riverside, an investment group. They advised Panther Overhead Door, a franchisee of Neighborly, on its acquisition by Impact Home Services that acquired this. And then you can see here, Boxwood Partners advises Sylvan Learning on its acquisition by Unleashed Brands, a acquired Sylvan Learning. So three pretty the Lash Lounge and Sylvan especially pretty big notable acquisitions to have occurred. So deal flow is happening in M&A. So if you're a franchisor, there's certainly opportunity. And if you're one of a new franchisor or someone thinking about franchising their business, it's just a reminder the opportunity is there, and I continue to see these trends grow. Okay, next up is franchiseinsights.com. Franchiseinsights.com. They produce a monthly report called the Small Business Startup Sentiment Index. And this was released on March 6th of 2024. And I really like this report that they produce. And here's their headline for this one. I'm going to zoom in a little so you can see this. It says, aspiring franchisees expecting startup within 3 months reaches record. 62.1% of respondents plan their startups by the end of May of 2024. So you can see this chart here that they show. So the question is, it says here, 63.2% of prospects agree that now is a good time for startup. And it says 28.4% strongly agree, 34.7% agree, which totals 63.2%. So almost 2/3 of the people surveyed say that now is, and that they're really serious about starting now or within the next 3 months. So let's see if we can pull up that chart. Okay. Here it says 83%, 86.3% expect their startups within 12 months. And it said that it said here, I'm just going to scroll back to the top. Sorry, everyone. 62.1%, which means these respondents plan to start their business this month or within the next 3 months. 62.1% plan to start their business in that time period. So what does that mean? Well, to me, if I'm a franchise marketer, franchise sales professional, what this says to me is that almost 2 out of every 3 leads I'm talking to is thinking about doing something essentially now within the next 3 months. They're very serious about it. So go in. This reiterates back to the other chart I was showing about the census data showing new business applications. Okay, where it's showing the just the volume of new business startups occurring. Well, look, we're seeing the not only the volume occurring, but the sense of urgency of getting that started. So share in that sense of urgency, even if your prospect is not displaying a sense of urgency with you on the phone or on your calls or meetings that you're having. It's important for you to know that there is likely a sense of urgency with this person. So keep that perspective in mind when you're speaking with them or talking with them to get that going. Don't be afraid to assume that they are looking to start sooner rather than later. I never like to assume much in sales, but this data is pretty strong indicator that it's very likely they want to get started now or very soon. So make sure you just plan on that as part of the process. Okay. Okay, let's talk through. Okay, so number of by generation, we'll take a look at percentage of current startup people by age or but basically by age, breaking it down by the various. Oh my gosh, generations. That's the word I was looking for. Generations. So Gen X is accounting for 61.2% of buyers. So keep that perspective in mind. The millennials at Gen Y, they account for 21.2%. Baby boomers are at 10.6%, and we're seeing a growing trend in Gen Z at approximately 7% of buyers. So that's the demographic or age breakup by generation. And then we have here this chart. So let's see. As access to funding remains a primary startup issue, prospective business owners are showing ongoing concerns about availability of startup financing in recent months. So they asked which of these factors will have the biggest impact in the next 6 months on your decision to start a business. So you can see here they changed this chart for this month. This is a new chart layout, so I'm just getting used to it. But funding or access to credit, 69.9% of the respondents said funding or access to credit. So almost 7 out of 10 said that funding or access to that credit over the next 6 months is going to be a very important variable for them. The economic climate is 37.6%. The stock market, 19.4%. Political changes, 15.1%. Regulatory changes, 15.1%. Tax law changes, 11.8%, other 11.8%. So what does that mean? Well, to me, when I look at this, having some solution in place, whether it's just through a third-party broker or lending source, to have some sort of financing or funding way to help your franchisees get access to funding and credit. If 7 out of 10, I mean, it's far above and away the number one category. Economic climate is number 2, but it's almost half of what the funding or access to credit is. So, and the funding and access to credit, that's something that you have a little bit of ability as a franchisor to support and control a little bit better for your franchise prospects versus in the economic climate. Well, there's not a lot you can do about the economic climate. It's just trying to adjust and live within it. So that is step. That gives us a final overview for these franchise or for the startup. For the new business startup sentiment index. Goodness, tongue-tied here. Okay, next from franchiseinsights.com. They run this, it seems like they do this about once a year or every few months, where they ask franchise prospects to indicate their preferred sequencing for initial channel contacts. And so 42.4% said that their first choice is email. 55.4% said that their second choice is text message. And 47.2% said that their third choice is voicemail or a phone call. So what does this say? Well, to me, it says to a franchise sales professional, when in doubt, send an email. If that's the only amount of time you have, only thing you have time for, send an email. Number 2 is send a text message. And if you have enough time to do all 3, then you leave a voicemail. So it's email, text, voice. Email, text, voice. And these numbers, these things have kind of flip-flopped, seasonality and over the last several years that they've been running this, but this is the preference today. Email, text message, voice. So just worth noting to maybe adjust some of if you've got auto emailers and a CRM that's doing this automatically, maybe have that email go out first and then a text message go out and then a follow-up call maybe the next day as a follow-up there. Okay, let's talk about what's motivating franchisees. And so it says, which franchise characteristics are most important to you? So this is asking prospective franchisees. It says the headline reads, it's about more than money. Prospects give feedback on most desirable characteristics of franchises. And so these are weighted averages that they pulled out from these answers. And so the candidates were asked, what's most important to you? Choose out of this multi-select. So they said, number 1 is the low cost of entry, 5.54 weighted average. Higher earnings potential was 5.51 weighted average. Flexibility of work schedule, 5.08 weighted average. Ability to work from home, 4.76. Systems and technology platform, 4.45. Pandemic resilience, 4.32. Extensive training and support, 4.32. Or a well-known brand, 4.1% weighted average. Okay, so here's how you apply this to your franchise. Think about that. Chances are for your franchise system, not all of these will apply to it. Maybe you're lucky and all of them do, and you can highlight it. But look at this list and find two or three. There's chances are two or three on this list will fit into your franchise offering. And if that's the case, think about highlighting those more in your marketing presentation and in your sales presentations. So if you have a low cost of entry, that's a good point to lead with, because it's showing as a weighted average for franchise prospects. This is going to be the number one thing that they're thinking about. If you have a high earning potential, well, that's one to be leading with, right? Lead with whichever one is ranking highest for this, if it fits your brand style and culture. So if that, I hope that makes sense, but I think this gives a lot of valuable information. What also is interesting, if you're an emerging franchise brand or a lesser known franchise brand, well-known brand is number 1, 2, 3, 4, 5, 6, 7, 8 on this list. So well-known brand is helpful, but it's not the leading driver why someone might be interested in your franchise system. So look at, there are 7 others above being a well-known brand. So sometimes I hear franchise insecurity with being an emerging or a growing franchise system where your brand is maybe not as well known at the moment. So just some food for thought for you there. Okay, let's talk about aspiring franchise owners, aspiring business owners are choosing franchises over startups or existing businesses for sale. So Franchise Insights ran a survey and asked, what options are you considering for owning a business? And to rank those, are you considering buying an existing business, starting essentially starting an independent business from scratch, or buying a franchise? And it shows that 65.3% are looking to buy a franchise, 54.7% are looking to start an independent, and 31.6% are looking at buying an existing business. So just some food for thought. And, I would say in my experience that these numbers tend to sit with what my experience has been and what I'm typically see in franchise sales. So it's interesting to see that. Okay, and the last category last chart I like to show is from franchiseinsights.com, where we talk about franchising data by category. So this is to show what percentage of which category of franchise has had the most inquiries as a percentage of the total inquiries over the last 90 days. Now, I'm on the by franchising data by category. This switched several months ago. I think this might be the business opportunity page, just because it has general business opportunities number 1 at 14.3%, and then travel and lodging at 12.2%, education at 10.6%, food and restaurants 7.5%, and child related at 6.9%. And then when I click over to the business opportunity page, this looks much more in line with what the franchise top 10 had been, with most of these categories being in the same order or just kind of one flipping over another. And it's showing that home services at 26.2%, cleaning and maintenance is at 13.4%, senior and healthcare at 13.1%, business services 12.4%, food and restaurants 7.8%, education 4.2%, financial services 3.4%, child-related 3.2%, pet services 3.1%, and real estate 3.1%. Those are the top 10 categories. And so with that is our program here today. So I'd love to open things up to see if we have any questions from our attendees. If there are any questions, comments, discussion points, feel free to raise your hand or type something into the chat box. Or I believe in the Q&A should be able to come through as well. And I will go ahead and answer those questions or comments as they come through. All right. Well, I'm not seeing anything come through. I appreciate everyone being here. Happy Good Friday. Happy Easter to all of you out there. Hope you have a wonderful weekend. And we'll have this posted up on our YouTube channel and on our podcast, Franchise Your Business podcast, here over the next few days. So be on the lookout if you'd like to share that with anyone on your team. Thanks so much, everyone. Have a great weekend.